Hello, everybody. Welcome to the Palantir's 3030 Club. My name is Adam Bergman, and I'm going to talk a little bit about Palantir. In today's video, I'm going to break it down into 3 segments. The first segment is going to compile a bunch of things that we currently know about Davos 2024. Davos, if you are unaware, is literally one of the biggest events in the entire world where really rich and influential people, both individual people, heads of companies, and heads of states meet and talk about a lot of stuff. This means a lot more to us, the individual person, than it does for the actual company. Palantir is currently in Davos, and we have some hints and clues about what is happening in Davos. The second part of today's video is going to be an article that came out by Shyam Sankar. It was found by the man, Lord Grimm. And I'm happy to share the article, and it's a little bit of, not a criticism, but a little bit of a review about the current procurement by the DoD, Department of Defense, and what it means for innovation and having the best technology for our warfighters, where I believe that this is a segue to on-ramp more customers, more partners for FedStart, where Palantir literally takes their knowledge, their partnerships, their connections over the last 20 years working with the military, and they're essentially your auditor to work with the United States military. And in today's final section of video, I will be talking about options. As per usual, I will be talking about being the bank and selling options. If this is something that you like, sit back, relax, and watch this screen. But before you do, as per always, please hit me up with a comment, a like, a share, and subscribe down below, because it really does help me with the almighty YouTube algorithm. If you're ready, watch this screen. This was a tweet that came out by Palantir, and it says, Palantir welcome Dr. Heckle Rail, lead IBM research, quantum, Angie Gifford, Vice President, Europe, Middle East, and Africa. She's the Vice President of Palantir. Mark Stampify, Business Director at NVIDIA. And Damir Bogdan, CEO of Quantum Basel, to discuss how quantum computing is the key to shaping the future of AI. Again, I just want to make it extremely clear. NVIDIA, over $1 trillion company. Meta, over $1 trillion company. IBM is several hundreds of billion-dollar company. Quantum Basel, I have no idea. But the sheer fact that Palantir is on a panel like this is absolutely ridiculously good and shows you the strength of Palantir. It shows you that Palantir is literally what's up. And I wanted to show you something right here. I shared a video about this yesterday, and I have a clue to what this is, and we're going to go over that clue together. So don't go anywhere. There's going to be a jam-packed video, and I want your help in this. Really cool. And this is the panel right here. Palantir at Davos. So this is the Palantir room, I guess, the Palantir screen. It seems like it because they literally have a Palantir mic and stand over here. So Palantir not only is participating, but Palantir is hosting, which is freaking dope. And yesterday I posted a tweet from Ahmet that says that Palantir is going to be present at Davos. They will be speaking. And he put out another tweet. Palantir CEO Alex Karp speaks on Wednesday at Davos after Sam Altman from OpenAI. Now, what do you guys think? So some people were saying, hey, Alex Karp should be first. Sam Altman should be second. And what I'm saying is you save the best for last. He's the opening act, while he's the main event. So I think going second is actually better than going first. Going last is better than going first. Let me know what you guys think about that. And yesterday I shared this. There was a little video from Palantir, and I said, what does that mean? And all it said was human line, AI line, human. And then they showed this screen right here, and it was like a 15-second clip literally of this screen. That's it. Now we got a bigger clue. But when I was looking at this, I see this right here. So I blew this up. Let me know what you guys think. This is the picture right here. Made it a little bit bigger. And over here it says, better human-human collaboration, building human-computer symbiosis, infuse AI into operations, leave chat behind. Now, does that mean that they're kind of shitting on ChatGPT and they're going to do a better version of LLM integration or data integration. And then I was looking for more clues. As always, we look for more clues. I didn't really see anything right here. This kind of looks like a globe, if I'm not mistaken, right here. And maybe a satellite going around the globe. I cannot read what these things say. We're about to get some information on this, but I did zoom in on this and it looks very interesting. So over here it says generative AI principles, and I can't really read anything. The purpose of AI is to amplify human intelligence, not, and I guess not simplify it or not take it out. I can't really read any of these. It says something about LLMs, but I could read this. And this says conceptions. Number one, the purpose of AI is ultimately to replace human operations. With only system data, AI agents can learn how to make sensitive decisions independently. LLMs are just advanced algorithms and can be deployed effectively in similar situations as existing models. The barrier to operationalizing AI is finding the exact right models. The most value will be extracted from LLMs via user-facing chat interfaces. LLMs can be seamlessly private data sets without some words a supporting interface. LLMs can be seamlessly maybe integrated with private data sets without a supporting interface. So I don't know what this means. I'm sharing the clues with you, but let me know what you guys think. Let me know if you guys can read what I just showed you. And maybe you guys can do a better screenshot of this. Maybe you guys can see what this says right here. I'm very interested to see what this says right here. I'm sure that Palantir is going to give us some clues about this in the next coming days, but Davos is about to be a heavy hitter when it comes to Palantir. I am almost sure that Palantir is going to come out with a brand new product. I don't know if it's going to be an entire platform, but I think they're going to keep building on AIP. And I think that since all the rage right now is LLMs, they're going to come out with their own version of something better than an LLM, where you can integrate your data sets very similarly to an LLM and maybe stack it. I don't know. I'm not sure, but it seems like they're coming out with some new innovation, some new platform. And I want to ask you guys, can you do me a favor and let me know what you think? Because I am extremely interested to hear your thoughts on this. And I wanted to bring your attention to this. Lord Grimm, at Lord Heragrim. Definitely follow this guy. You have no idea how much information he puts out. He's absolutely a stud when it comes to finding stuff. And he put out this article. The military's insistence on owning commercial intellectual property is limiting innovation. And this is by Shyam Sankar and Madeline Zim. So Madeline is Defense and Space at Palantir, and Shyam Sankar is the CTO at Palantir. Let me make sure that I'm following her, by the way, at Madeline_Zim. And this is the article right here. I took a moment to highlight the most important things so we don't go through this for the next 20 minutes. Take a look. I just want to precursor by saying that this, in my personal opinion, is the beginning of Palantir's FedStart, or trying to push more education and more on-ramping through Palantir's FedStart. So let's go right here. And keep in mind the word interoperability, because this is what Shyam keeps pushing towards. So it says the military insistence on owning commercial intellectual property is limiting innovation. In early December, the Department of Defense Intellectual Property Cater hosted an inaugural DoD IP forum where government and industry leaders convened to debate the growing role of commercial software in national security and how the U.S. government can improve its intellectual property posture towards industry to achieve better outcomes for the department. By the way, this is literally us, commercial software. Palantir is a commercial software company making interoperability and integration with the DoD, but they are a commercial software company. And at first glance, the issue of commercial intellectual property rights may seem unrelated to how the US government seeks to meet the needs of Americans' warfighters. But the Department of Defense leaders are beginning to recognize that intellectual property policy has become a serious obstacle to defense innovation. Now, you guys can read this on your own. I just highlighted a few things. The result is that software providers eager to support the Department of Defense risk losing the very asset that sustains their business, company intellectual property. This not only dissuades commercial technology providers from seeking government contracts, it places a practically onerous burden on younger, non-traditional tech firms that are hoping to break into defense industry ecosystem. Guys, just remember, younger, non-traditional tech firms that are hoping to break into the defense industry ecosystem. And this is why I'm saying this article is a precursor, a on-ramp to Palantir's FedStart, which streamlines the process of a private company starting to work with the DoD and using Palantir's IL5, Impact Level 5, and soon to be Impact Level 6 clearance with these companies, essentially taking a auditing fee and a big brother fee. This is very, very important. As a senior leaders at Palantir Technology and Tagram Flex, software companies that do a great deal of business with the Department of Defense, we have a direct interest in contracting outcomes. But we also bring a unique perspective that is formed by the cumulative 40 years of expertise working through the barriers. This is very important. Barriers of commercial software adoption by the US government. This is how absolutely difficult it is to break through working with the government if you are not one of the DoD primes like Lockheed and Martin and a couple of other companies. Based on our experience, we believe that for the Department of Defense to vastly improve the speed and scale with which it acquires the field emerging technology, it should rethink its current approach to intellectual property ownership. I would like to take a moment to thank today's sponsor. Today's sponsor is myself. I'm sponsoring my own channel. I work very, very hard to bring a lot of content. And I want to say, if you want to support the channel, I have a link down below to channel membership. It's $3 a month. Channel members get a weekly live 8 o'clock Eastern Time PM every single Wednesday where I will be reviewing options, specifically being the banking options and specifically using options, selling options, cash secured puts, covered calls, iron condors, credit spreads, so on and so forth to supplement your income. So it's not necessarily to make as much gains as possible. It's to maximize your returns and increase your weekly salary by being the bank and selling options. If this is something that you would like to learn, I have a link down below. Again, it's $3 a month. I think it's an absolutely amazing deal. And with this, you will have private member lives every single week. And the members can join the lives where we can actually speak on video. You don't just have to type. If this is something you want, click the link down below. Now let's get back to your regularly scheduled program. This is going to be a very, very important paragraph. Again, you guys can read this yourself, and I highlight it again. Additionally, the issue driving vendor lock and high switching costs is proprietary interfaces, not proprietary code or intellectual property. So what they're saying is, let me just break this down for you guys, unpack this. Vendor lock means that you're working with one company and it's extremely difficult for you to switch company. And high switching costs is because that company is so integrated in your business and it has no interoperability. You are, for lack of a better word, fudged. I don't curse as much because now I have kids, so I'm trying to stop cursing. So you're absolutely fudged. He says, not proprietary code or intellectual property. So this is not the problem. The problem is the high switching costs in proprietary interfaces. Why? Because there's no interoperability. Read this is very, very important. As a former special advisor to the Secretary of the Air Force, Tim Grayson said, about software solutions from traditional defense contractors. So this is like Raytheon and Lockheed Martin, I believe Boeing, there's like 5 or 6. When we have worked interoperability at the data level, what we have found is the biggest problem is legacy programs and their vendors that don't know their own system. Just read that again. The biggest problem is legacy programs that don't know their own systems. We might have to have them spend 3 to 6 months effectively reverse engineering their systems and documenting what their interfaces are. This is not Palantir, and Palantir is new school, the new boy on the block. And this is all an on-ramp for Palantir's FedStart, which I'll get to in just a moment. Ironically, the complexity and bespoke nature of many custom government off-the-shelf solutions drives outcomes that the government is trying to avoid: increased technical debt and vendor lock to developers. Now, there's a lot more paragraphs, but I don't want to take too long to read this, but they're just talking about interoperability is much more important than intellectual data ownership. Take a look at this. This is Palantir's FedStart. This is where I think this is all leading to. Palantir FedStart, delivering cutting-edge solutions to the government and to speed of innovation. What is FedStart? Supports companies to be FedRAMP and IL compliant. Currently, Palantir has IL5 and one of only 3 companies to have IL6. The other 2 companies is Amazon, AWS, and Microsoft that combined have nearly $5 trillion of market cap. Meanwhile, Palantir is just a small, lonely, under $40 billion market cap company. It's quite comical if you think about it. What does it do? Accelerates accreditation for FedRAMP IL5 or IL6. Can take years and cost millions. In consulting and engineering fees, FedStart can significantly accelerate time to market by eliminating the need of organizations to pursue accreditation on their own. If you're wondering, has anybody signed up on this? This is 3 months ago. I believe this number is now, off the top of my head, 25. Palantir is proud to support and empower a growing government tech system. This is from 3 months ago. I believe that this was 9 3 months ago. Palantir is proud to support and empower a growing government tech system. FedStart turns the 18-month, $2 million accreditation process into something that can be done in as little as 6 weeks and at a fraction of a cost. We are proud to welcome these companies right here. These are the 9 over here. However, Palantir is most certainly working with more than just 9. Last time, I believe there's 15 or 25 off the top of my head that I know about. Remember, that picture is from 3 months ago. They keep signing up more companies. The reason this is very important is because they're essentially generating alpha and revenue, and it's not really costing them much. They're just auditors, and they're building relationships and partnerships where these companies can now be using Palantir Foundry. Very, very important, and I think they're going to keep pushing this, and essentially they're going to become an intermediary prime for companies to work with the DoD, especially these new companies that are trying to break into the industry from all of these legacy companies. I think it's absolutely phenomenal what Palantir is doing. I think it's absolutely genius, and I think it's absolutely going to help our bottom line. Again, look for this in the second half of 2024 in the earnings reports, in the quarterly results, and I think that we're going to be seeing a lot more onboarding. And this is just an ability for Palantir to expand. Although we can't reach mom and pop companies and mid-sized companies and even large companies, we're essentially working with Fortune 500 companies. This is a way for us to generate more alpha, generate more revenue with working with smaller companies by essentially holding their hand, allowing them to work with the DoD. Guys, it's a very, very interesting time. It's a very, very interesting time. Last week, I told you about a Tesla options plays that I have. I have 2 Tesla options play. It's called a strangle. One is where I own shares and I am selling covered calls. And one is where I don't own shares and I am selling cash secured puts. Selling a covered call means that you have 100 shares of a certain stock and you are saying that you're willing to sell it at a certain strike price. Selling a cash secure put says that you have money to buy a certain stock and you're going to buy it at a certain date at a certain strike price in the future. You are securing the put with cash, and covered calls, you are covering the call. The premiums that somebody pays, it's yours to keep no matter what. Not all plays are gravy. Not all plays work out perfectly. I have this Tesla play, and between both of these options, I made, over 10K in the last, I would say in the last 6 weeks since I'm managing this options. In the play that I'm going to show you right now, it was a cash secured put where I had five options for Tesla, which is 500 shares. Every option has 100 shares. And I started this option at 255 strike. I ended up getting called for two of the five options at 257.50 strike. But as you know, I paid 257.50, but the current price of Tesla per share is around $220. So I'm automatically underwater around $7,500, but that's okay. As I showed you before, I covered the underwater with the premiums that I collected just in this specific account. And now I'm going to show you what I do when I'm underwater and I get called on the options when I get assigned. Now I own 200 shares of Tesla. What am I going to do with this play? Let me show you. All right, this is my account right now. We're down to $527,000 in the public account. We're down another $6,500. And all in all for this year, we are down $76,000. Guys, I'm not one of those people to only show you wins. I will show you a lot of losses because the losses come as hard as the wins come. Currently, I have a position that I'm managing. This is a cash secured put position. As you can see, if you go a little bit lower, I currently have 3 contracts, but I did have 5 contracts. Now, since I'm in the money, right? Since I'm saying I'm willing to buy at 257.50 and the current price of Tesla is 220, at any point in time, somebody can initiate and assign the shares to me, and I have to buy it. I don't have a choice because I'm saying I'm willing to buy at 257.50 and below, and it is way below. So I will have to buy them, and I would be underwater. How much underwater? I would be $11,295 underwater. Hopefully, I don't get assigned, and we are going to go up after earnings. Now, what happens when you actually get assigned a contract that's in the money? This is what happens. I got assigned 200 shares of Tesla. If I go a little bit lower, you're going to see I have just a bit over 200 shares. I had like a fractional share, but just look at this right here, 200 shares. I bought these shares and I'm automatically down around 15%, $7,400 as of right now. Today was a decent day. I made $300. So what am I going to do? The current price of Tesla is $220. I bought these shares for $257.50. I need to start collecting premium. I need to start collecting money. What exactly am I going to do? What's the play here? Okay, I'm going to start to try to collect as much premium as I possibly can. So the first thing I'm going to do is press trade Tesla options. Now I'm going to press sell, and I'm going to sell a call. Go down to where the actual strike price is. The current price is 220. Go all the way down to 220 right here. Now, if I sell a call at 257.50, the premium that I'm going to be collecting is 6 cents. 6 times 100 is $6. Times 2 contracts, I will be making $12. The expiration date is going to be this specific week. This is not good. Now, there's a golden rule that says never sell a covered call for less than you bought the shares for when you get assigned a cash secured put. Anybody selling options is going to tell you the same thing. However, and my boy TJ's Wheel and Deal knows what I'm talking about. Sometimes you're just so underwater on a play that you can sell a contract for under your strike, under what you bought it for, because you're so underwater that it's not going to get assigned. And you want to collect some premium. So what are you going to do? I'm going to go down. Where am I going to go down to? So right now, Tesla is $220. All right. I do not think that Tesla is going to go up more than, let's say, 10%. In reality, it's probably not going to go up more than 5%. So 10% of $220 is $22, and 5% would be $11. So I would take $220, I would add $11 right here, and I get $230 or $232.50. If you click on $232.50, the chance of me actually not having to sell my shares is 88.5%. That's really good. Or I could do this one right here, which is 85%. I like this one. I'm probably going to do this one. The implied volatility is only 51%. But I want to do just one thing, okay? Implied volatility means that you are not getting crazy premiums. This is not good if you're selling contracts. This is great if you're buying contracts. I want to just see what's going to happen if I move the contract to January 26th, which gives me essentially 2 weeks, but 10 days since it's the middle of the week. If my implied volatility is going to be higher, here goes my 230 right here. And all of a sudden, I will be collecting $5 because my implied volatility is starting to go up. So if I wait 10 days and do 230, I would collect $5. Okay. This is starting to look a little bit better. How much is $5? I have 2 contracts. Boom. I will collect $1,000. Remember, I am $7,500 underwater. If I do this for 7 weeks straight, right, and the price keeps going up and I'm going to consistently raise my price, I'm going to break even with how much I'm underwater, besides for the price appreciating. So let's just go back and let's see one more thing. Let's go back to the 3-day. If you're going to go to the 3-day, you would only be collecting $1 premium. I would prefer to collect $5 in premium. The problem is you have a lot more time for Tesla to go up, and Tesla is about to have earnings. So what I would like to do is go one more. I would like to go 17 days. Now, I don't usually do 17 days. I don't particularly like 17 days, but look what just happened. The implied volatility went down because this is right after earnings. If I'm not mistaken, Tesla earnings is on January 19th. And all of a sudden, this is not looking as juicy. Let me explain to you again what I just did. If you're going to go 3 days out and you're going to go to 230, you're only making $1. If you're going to go to 10 days out and you go to 230, you're making $5. So you're making 5 times more premium. If you go out one more week, all of a sudden you're making $650. So it's diminishing returns. The increase is not there anymore, right? So for me, this one looks a lot better of 230. However, because of an extra week, I would like to go up. Remember, if I do 3 days, I'm collecting $1 premium. So if I do a second week, I would like to collect at least $2 in premium. But I'm not willing to sell that low. So what you could do is anything above $2 ending the 10th in 10 days is good for me. So what I would do is I'll go back to Tesla. Maybe is going to go up 5% this week. Probably not. Maybe Tesla is going to go up another 5% next week after earnings. So let's say I am willing to sell at $2 and $240. $240 puts me right here. It gives me a nice $2.67 of premium. If I go over here, there is an 84% chance for me winning right here. The implied volatility right here is around 61%. This looks like a good contract for me. I could keep it a little spicy and go right here and do 237.50. However, I would be happy collecting my premiums right here. I would press continue. I have 2 contracts. So I would collect $527 in the next 2 weeks. I'm very, very comfortable with this because, again, I don't want to sell my shares of Tesla. I don't. I would like to flip the contract and move it forward. Tesla is bouncing off the bottom of the Bollinger Bands. If at this particular point in time I do have to sell my Tesla, I'm actually going to be selling it at appreciation. Because remember, take off the amount of money that I collected for premiums, which was around $7,500. The price is going to appreciate from 220 to 240, and I'm collecting premiums right here. So I will not be mad at that. When you do this, there's going to be a range, a bid, an ask, and a mark. If you're going to go all the way to the left, you're collecting a little bit less premium, high likelihood. If you go to the right, you have a chance of it filling. And all the way to the right, very low risk, very low opportunity. Go to medium right here, review, submit, press done. And now if you're going to go back to the contracts, you're going to see right here, I have a sell to open 267. Now I want to show you something really, really fast. Look right here. You see my buying power is 57,779. In just a moment, you're about to see that $500 hit my account. You see right here, right in front of your eyes. It went up. There you go right here, 57,847. The reason why the buying power went up a little bit more is because now I got money in my account from the premiums. But you see, the money is yours automatically. And now I have, just for you guys to see, I have a Tesla 3 sells for January 19th, and I have Tesla 2 sells for January 26th. The 3 sells for January 19th is actually this week. I'm going to roll this forward because they end this week, and I'm going to collect more premium. Currently, Tesla is up 0.6%. This looks good. I know that Tesla is not going to hit 257 this week. What am I going to do? I am going to roll this option. When you press roll this option, I am saying that I don't want to finish this contract this week. I want to buy myself 10 more days. What am I going to go to? Go all the way up to what strike you have right now. Currently, I have 37.88 on this contract. If I do 257.50, I would collect 37.78. It essentially cancels the contract out. However, it's not going to cancel it out 1 for 1. I'm actually collecting a little bit less premium here than I owe. So actually, I will be a little bit under the water, but I don't want to go too high because I don't want to keep increasing the amount that I'm going to pay for the shares. So I'm actually going to click this one, and this is a new position, and I would actually have to pay $24 for this. I am good for that. And I would say, boom, review my order. And they would say, do you understand that you have to debit, which means that I have to pay? I understand that I have to debit. Okay, so I submitted this thing. Now, I don't know if this is going to get filled right away. Did it already get filled? And yes, it got filled already. You see it right here. So essentially, I had to pay like $10, but I bought myself another week. So instead of this ending on January 19th, this is now ending on January 26th. If Tesla keeps going lower, I'm going to start being more and more underwater on that play. And essentially, I cannot have Tesla under 220. If Tesla goes under 220, I now have to take out money from my pocket to keep extending those options. But I am making premium on my other contracts, so they all even out, essentially. I do believe that Tesla is going to be 300 before it is going to be 200 in this year. And I'm okay with that. We see what happens. And this is how you manage a contract. I hope this is something you enjoy. If you want to know more about contracts, I have a channel membership down below, $3 a month. I do a live every single Wednesday at 8 p.m. Please feel free to join and come to the live, and I'll answer any questions that you have. In the meantime, please enjoy this video right here. It's jam-packed with knowledge and information about Palantir, and I'll see you guys in the next video.